We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to look at accumulation and markup examples. We're going to use the popular chart of Bitcoin log format. We're going to use Bitcoin because one, it's popular, and two, the volume statistics is very clean. And yeah, so here we have a prior example of accumulation, a little pause at the halfway, and a topping. Now, accumulation here, if you're accumulated here, you put your stake money in, let's say you've got an average price there, whatever it is, $1 say, it goes up 100%, you take your stakes off the table and let your winnings run. That's exactly what happened there, okay? Now I call this channel here the birthing channel because this is the immediate trend of the first life of Bitcoin. And then we had another accumulation here, right, oops, a bit bigger box, accumulation there, at a markup, and then we had our 100% gain here. For example, people accumulated here, their stake money, it went up 100%, around about there, you know, it's all average costing, took their stake money off the table, let the remaining run, and obviously topped out there. Now, once again, we've got another accumulation here, and if you the average price in there, we're now having the situation where we're having our people who put their stake money down, they made over 100%. Those who wish to take it off the table and take the original stake money off and let their profits run, it's now happening here. And as you can see, this little pause here is thinner and thinner, because obviously because the confidence of running it high is getting better. Now this channel, the blue channel here, is a bit more of a more senior channel. As you can see, it's slower pointing than the original channel because obviously it's a maturing market. So let's just call that the teenage channel. So we're into our third accumulation here. Now what's important is to understand that the markup process between there and there, here and here, and I would suspect when all is said and done, the markup process is going to get up to the top of the range, which is around 200,000 to 20,000. The markup process created a range for massive supply over the following years. See that massive supply? So probably going to get massive supply. So it created the range to around here. So pumped it up, got it up to a level, and then the miners and all those who accumulated around there could use the time frame, whatever they accumulated down here, to start distributing up here and to get the average cost selling price. And then once again, when conditions changed, they accumulated here because that was Mount Gox, I think. Here they accumulated. This is more of a risk-on trade because it synchronized the S&P 500, pumped it up to 20,000. So pumped up from $200 to 20,000. They distributed between 20,000 and 3,000. I mean, if you invested $200 and you got a lousy $3,000 for it, you're doing very, very well. So this is the distribution area, and obviously an accumulation. Now we've got a markup process, distribution here. Sorry, accumulation here. We've got a markup here, and my guess is they'll pump it up as high as they can because they know the downswing is going to be just as vicious as these ones here. You're going to have a 50-60% downswing, and all the accumulation that went on here, they're going to be able to accumulate between 3,000 and 10,000, and they'll be selling between 220,000 and probably 50,000. So you can't tell me that story won't repeat. That's what I see happening, but they've got to get it up to allow a good distribution. But let's have a close look at the accumulation distribution. So we'll go to a shorter time frame. Right. So here we have the recent accumulation. Now, you know, obviously we've got the initial smackdown here of distribution, but we've got accumulation. Let's say real pure accumulation between there and there, and that. And this time frame between the first two bars is about 1 year, 2 years. So that's 8 quarters. Say 10 quarters. 12 weeks a quarter. That's 120 weeks. My math is good. And now we've got the markup process between there, as I think I counted that to be 15, 16 weeks. Okay, so that's 120 weeks of accumulation versus 15, 16 weeks of markup, which obviously, if you can see here, this is the average cost price is around 10, See there's 10k there, 10,000, and now we're up at these levels here, which is obviously around 40. So you've easily doubled your money. So all those people who put their stake money down here accumulating, they're taking something off the table. You can see there by the supply. They're now taking their stake money off the table there, those who wish to, which is a common trading strategy. You know, you invest $1, the wealth goes up to $2, they take the $1 off, let the other dollar run. Okay. So now, what's interesting, if we have a pure markup to 220,000, another 15, 14, maybe 10 weeks to get it up to the top of the range. Now that would be Mr. Perfect. We do have a massive challenge in between around the 100,000 mark. Well, yeah, let's say the 80,000, 100,000 mark, where some supply would come in. That's those people who invested in there, let the dollar run and invest up there, realising they've never enjoyed such profits, so they could see some massive supply come in between the 80 and 100,000 mark, which could slow it down. I'm talking patterns like this sort of thing. And if we are to break the upper channel, the blue line to 220,000, you know, you're talking about the US dollar getting down to 82 or something on the DXY. I'm fully expecting the US dollar to go through the 88 mark. We saw it turn around recently at about 91 on less than fantastic jobs report. They might see that going into the future. So we have a situation where risk-on assets going up and the bond market getting a bit worried. That means the dollar will go down. That means inflation subdued. That means the Mr. Perfect US economy is not going to be so great. It doesn't mean risk-on asset prices won't scream high because it's in a pump stage. But for the Bitcoin to say get really excited and get over the 130, 150, 200,000 mark and maybe 300,000, would have to see some interesting things like the dollar getting down 85, 84, 83 on DXY, the the Federal Treasury account, which has got 1.6 trillion in it, that coming into the market. I'm talking a real juicy pump up, which is typical at market tops, okay? Especially when people are talking about a 49-year or 80-year debt market top. If you refer to David Hunter's work and a lot of other stuff, a lot of market tops happening, and a lot of Fibonacci and Gann tops happening in 2021. So we could get an all-time classic pump up, and I could go anywhere between 60,000 and 300,000. Nobody knows. But like I said before, is the pump markup relative to the accumulation is quick in time. It's on a 10-to-1 basis, like this took here, like I said before, 120 weeks. This has been taking 15 weeks. So anything between 10, or let's say 8, and 16 weeks, let's say 8 weeks is 2 months, or so we're now in February, March, April, May, June, could be absolutely crazy times for Bitcoin and cryptos. So I just wanted to highlight the accumulation, markup. You see the volume here. Look at the volume here. This is the original breakout here. Look at the volume here compared to the volume here. It's not really happened yet. So if we're going to get a crazy markup period, which is really this period here, repeating itself, the volume would start going crazy. As all those naysayers, all those people who sit on the sidelines, all those people who've only got 1% in their portfolio suddenly realise they should have had 5% or 10%. They start, the pump starts to get going, the news stories start going crazy, and FOMO, and what's the other one they call it? Fear of missing out. Is that the one? Yeah, fear of missing out goes nuts, and I would think that's how we can get up there. So we are set up for quite a spectacular, possibly a spectacular markup to mirror all other Bitcoin markups. But this time it's going to be the institutional bidding and what have you. So thanks for watching. Get ready.